commodities, and where we have seen massive volatility across the board with huge rises in gold, a slide in the cost of oil, and a return to a slightly bearish view on overall commodity prices as the debt crisis in Europe continues to take its toll. For the latest on the sector, I'm joined by Jonathan Barrett, Managing Director with Commodity Broking Services. Jonathan Barrett, welcome to the program.
Good morning, Whitney.
Now, commodity prices in general, some analysts are saying that they're starting to get this little bear run on commodities across the board, saying that demand will drop in response to what's happening with Europe. What's your view there?
I think we've generally seen a lot of that already occur. Over the last couple of months, you've seen a lot of commodity prices, particularly those primary import prices, coming under a lot of pressure. And I think one of the key is it really does rest with what's happening in Europe, also America, but in terms of what's happening in terms of economically and stability, because Europe is such a big consumer of commodities. If in fact there are major concerns then, that's only going to affect pricing.
But is there a concern that if we start to see this bearish attitude in the market, that it will then affect sentiment and push commodity prices lower?
I think that's a good thing. I think allowing commodity prices at this stage to go low is actually quite good. Remember also the US dollar has actually been quite firm because of the crisis. So that's also aided a weaker outlook for commodities. So I think whilst we've got this stability, I think it's great. I think having commodity prices so high is actually hurting economic growth. Having them lower so they can clear more profitably within the economies is actually quite good. So if anything, where we are at the moment economically, I think lower prices is actually quite positive.
Now, you've just come back from Europe. Can you just tell us generally, I mean, of course, from our perspective, it's wildly negative. I'm sure it's there the same when you're standing on the continent. What's your view?
Look, it is quite interesting because you've got those very strong economies and those weak economies. And what we actually starting to feel is that the stronger economies are feeling a little bit of resentment to actually always having to support the weaker economies. But the stronger economies have no choice. They actually have to support what's happening there. And it is interesting because we've had this, the monetary union. This is, I think, is the first step in actually looking for fiscal union because they've now got to interact. We have to look for, internal devaluation. So from an economics perspective, it is really broadening what needs to happen. And I think at the end of the day, they will come out a lot stronger.
Do you think we will see fiscal union in the EU?
I think they've got no choice. I mean, they've really got to support. They've had some major issues in terms of liquidity there, and without the Financial Stability Fund, which is similar to the TARP in the US, we could be in a much worse position. This is not going to happen overnight. I think this is a process that's going to evolve the next 5, maybe 6, 7 years. But I think fiscal union, I think they've really got no choice but to look towards it.
Now, what's your take on the speculation that China rather was going to play the white knight to Italy, and then that, of course, didn't eventuate. So you were there when this was happening. What do you think about that?
I think China's played white knight to a lot of countries around the world, to tell you the truth. They've got the balance sheet to do that. And I think you'll find it's China's style to actually come in and help.
But they didn't in this case.
Maybe on the outside, but when you look internally, believe you me, they'll be in there looking for opportunity. It's just the way they are. Perhaps not to declare your hand, but to be there. I think they'll find they're there. They're there looking for opportunity, looking to secure their facilities, their lines, their commodities, all those sorts of things. So although they weren't there, I think they will be there.
Now, do you think we've heard a lot about Greece must have an orderly default because it's not a question of if but when it defaults. So do you think it is actually possible for Greece to have an orderly default? And if it does, what will that mean for commodities?
Look, I think an orderly default, okay, let's say you've defaulted, what next? Okay,
it's that easy.
And that's that easy. And I think people read too much into it. Yes, there are concerns, but Greece is also part of a union, so the union's going to support them. So I don't think it's going to be too much of an issue. I think to come up and say we've defaulted, yes, that's occurred. How will that affect us moving forward? Well, we got to internalise a devaluation. We've got to make sure that that all happens in an orderly fashion, and then they'll slowly get to grow. They'll recognise the concern, and then they'll move on.
But I guess one of the issues that's arisen in the wake of this is that if Greece has an orderly default, then that might spark a trend that we see, perhaps, Spain, Portugal, Ireland, and if that starts to happen, what will be the roll-on effect for Asia and Australia? Look,
I think that the fact that the European community have said it's not going to happen. If it's a default, it'll be orderly. They can't have that running. They can't have Greece looking to skip out or be expelled, because Europe now owns a lot of its own debt. So, if you get one having a concern, then it'll flow on. And I think that people really don't want to see actually what will happen. So they're going to defend it, come what may. And I think when you look at what Trichet and Merkel have actually said in their statements, that they will not allow it to default in such a way. They will allow an orderly, we'll call it orderly, but it'll be controlled. And I don't think you'll get that run-on effect. How it'll affect Asia? I think it'll only affect Asia in terms of the demand for commodities, because I feel that this whole process will stagnate the economy, perhaps the European economy, and that in itself might affect its trading nations. So I think there will be a flow-on effect back to Australia and Asia, because I think economic growth in Europe will be stalled for many, many years to come.
So you're predicting that there would be enough domestic demand throughout the region that would offset any drops in demand?
Absolutely. I mean, we're still backpacked, or Australia's packed by the Asian power base in terms of economics. And when you look at 7-8% growth in terms of that, our resources are just going to be pushed up north. And I think whatever happens in Europe will slowly get growth of 1 to 2% over time. But generally, we've still got to remain focused on Asia.
It'll muddle through, as lots of people like to say. Just briefly before we go, looking at gold, interestingly enough, gold predictions have been cut recently. It has risen 28% this year.
Yeah, but it has. 1920 is the key. I think that whilst we continue...
Will it hit 2,000 by the end of the year?
Hopefully it won't be on the back of what happens in Europe. But generally you've got to look at how gold has been trading. 1920 hit its twice. We've had a correction back to 1780. It's starting to look relatively good again, given the prospects of the future in terms of inflation, that sort of thing, an optimistic growth. It's got to be inflationary. But I think whilst the dollar is stronger, whilst the concerns are at ease, gold's shine has perhaps tarnished a bit. But I still think it's still a buy and dip scenario.
All right, Jono, we'll have to leave it there. Thanks for joining the program.
Thanks, Whitney.